सर सबसे पहला सवाल, markets are very overvalued. Should I invest right now?
Nifty is no more cheap.
What are some industries that one could consider for the next 10 years?
If you're new to the market, mutual fund is a way to do it.
जानना है कि 10-15 साल बाद क्या आप आपका ड्रीम कार, ड्रीम घर, ये सब स्टॉक मार्केट रिटर्न से कमा सकते हो? Hello and welcome to a new episode of Ask the Expert. Today I've got Gaurav Dua. Gaurav Dua heads the capital market strategy division of Sharekhan and इनसे बात करते हुए मुझे पता चला कि ये अपने स्कूल टाइम से इन्वेस्ट कर रहे हैं. इन्होंने 87-88 पे अपना फर्स्ट IPO इन्वेस्ट किया था एंड आज उनके साथ बैठ के हम इन्वेस्टिंग के बारे में नए चीजें सीखेंगे. गौरव सर, वेलकम टू द शो. कैसे हो आप?
Thank you. I'm good. How are you?
आई एम गुड. पहले तो आप ये बताइए, आप 80s में आपने पहला स्टॉक खरीदा, ठीक है? तो आप 80, 90s, फिर आपने अर्ली 2000s, 2010 से 2020 वाला डेकेड देखा और अभी आप ये वाला, तो आपका पांचवा डेकेड चल रहा है ऑलमोस्ट, ठीक है?
Almost.
ठीक है. व्हाट इज द शिफ्ट इन द इंडियन कैपिटल मार्केट्स फ्रॉम 1987 to 2023?
So I think the largest shift has happened that a lot of people have started to invest in equity.
Okay.
I remember in 80s, 90s, there was very small part of people, country. You know, you had people in Maharashtra, Gujarat, and some parts in South who used to actually invest in equity on a regular basis. Now I find that there is widespread acceptance of equity as a investment class.
Yeah.
So that I think is the very big change which has happened. And a lot of the credit for this goes to the brokers, equity brokers like us, and also to all these mutual fund companies. They have done a lot of work in terms of educating the people in terms of the opportunity that is available in the equity market. To give you some numbers, if you look at the past 1 crore new accounts which have been opened, out of that 44% have actually come from North India, and I'm from that North India. And I remember when I started doing my job in equity markets in late 90s, people used to say after MBA engineering, why are you going to equity markets? And now there 44% of the new accounts have come from North India, and out of that, out of 1 crore, close to 18 lakh only came from UP. And UP earlier wasn't a state where you had so much of this equity investing culture.
So you have been, on a personal level, you have been investing for the last 30-40 years, right? And professionally भी आप इसी इंडस्ट्री में, फाइनेंशियल सर्विसेज इंडस्ट्री में कितने साल से हो?
I've been in equity market since 1998, so it's almost like 2.5 decades now.
So one of the most common questions out there is that if a retail investor wants to start out their investing journey, wants to start investing in stocks, what are some of the first steps that they should take to have a successful experience?
So you have to start first with the right expectations and what you want to achieve. You should have an objective in place. I see a lot of people just come to explore the equity markets, and they will try everything under the earth without understanding the risk which is this thing associated with that product. So there is a lot of confusion between am I investing or am I trading, or I just this thing trying to this thing play the momentum. So that's where I think people get lost, and that's where I think you require a little bit of a homework when you start investing. You can take advice, professional advice, and that advice will only be right when you have your objective in place. Are you here in the market for 2 months, 6 months to make this fast money, or you really believe in the equity as an asset class and you want to invest for next 2, 5, 8, 10 years? So your plan, the advice will be accordingly.
So what is the right expectations in terms of what is the right return expectations? कि मतलब अगर एक इंसान को सही में satisfied रहना है और अगर वो लंबे टाइम तक रहेगा, वो तभी होगा जब उनके expectations are aligned with the actual results, right? So what is the right return expectations?
So I'll talk about investing. So in case of investing, if you see what we believe, if you can get 2.5 times of what you can make in a bank FD, that should be the right expectation. If you have 6.5% kind of a gains returns in a bank FD, and you're looking at 15 to 18% kind of a return over next 2 to 5 years, that I think is very, very achievable. And with that, you will be buying the right kind of stocks, you will be doing the right kind of allocations. You won't have to take the unnecessary risk of having a very large exposure into micro caps, speculative stocks, momentum stocks. So I think that's the right way to invest, and it is not difficult to achieve that 15 to 18% kind of gains, because if you look at India's nominal growth for last 5, 10, 20, 15 years or whatever the time period you choose has been the range of 11 to 11.5%. That means your real GDP growth plus the inflation. Okay,
true.
And your top companies, 50 NIFTY companies, grow at slightly higher level than that. So their profits are growing at 13.5%. And if you can choose the right kind of stock, so you can have an alpha of 1.5 to 2.5% over that. So that's the range where you can have a very balanced kind of allocation portfolio between large cap, mid cap and small cap, and you don't have to try and chase very short term kind of a speculative game, momentum stocks. That's the way I think. If you want to invest, that's the way to invest.
Okay, so like you said, 15 to 18% should be a good expectation, right?
Correct.
But at the same time, it is not easy and it cannot be done without a serious approach, right? So what are some of the steps that an investor should take? What are some of the resources they should understand or read so that they can actually, be an investor who can clock like 15% CAGR for like next 9-10 years? क्या-क्या चीजें उनको देखनी चाहिए?
So if you're investing into equity market on your own directly, or you're investing through the mutual funds, or you want to trade, one thing which is very, very important to be successful in the equity market is discipline.
Right.
You have to have a disciplined approach. You can't keep changing your investment or trading plan randomly. That will not work. And when you talk about purely investing has three parts. One is that you identify the stocks. Identifying the stock requires some skill, homework, reading. You can also take advice of some professionals. Number two, once you have bought those stocks, identified those stocks, you need to actively track them, because we are not living in a static world.
True.
Things change, so you should know what is happening in those stocks that you are tracking.
So what should we track? Should we just track the prices?
So you have to track prices and news both, because there could be some changes in terms of this policy. There could be some changes at the macro level, or there could be some changes or some events that could affect the company at the company level. So you have to track those and try and understand what's the impact there. Number third, which is the most important part, which is where the most investors actually do not do a good job, is taking timely action. By this timely action, I mean booking profits at the right time and also booking loss if required. You can't be right in all the stocks that you buy, invest or trade. So whenever things go wrong, you need to exit.
So let's say someone wants to invest serious money in the equity markets but does not have the time or the knowledge to do that himself. Okay. So then in that case, what is the role of a financial advisor or an investment advisor in this journey?
So it's like for example, full service brokers like us, we provide a lot of inputs. So I have a very strong fundamental research team. This 12-member team, each of my analysts will have experience of 8 to 10 years. We give calls, recommendation or investment advice on 235 odd stocks. Now, a lot of our investors who have the understanding and the time, they're able to use these inputs, research inputs, and they're able to invest. Some of the investors who are not able to do it because of lack of understanding or time, what we have done is we provide them the ready-made kind of solutions.
Got it.
So we have introduced something known as Invest Tiger. It's an app available on this Play Store, and that gives you 8 stock baskets. Okay, so you can choose out of that large cap stock basket, multi cap, flexi cap, small and mid cap, and also on some themes. So that's the way that we help our investors to invest. Thirdly, we also offer portfolio management services.
Okay.
Where again we have a multi-cap kind of an approach, but it's a very balanced approach with a lot of focus also on large caps and good mid caps name, rather than having a very skewed approach towards a small and a micro cap kind of a portfolio, which tends a very aggressive kind of a portfolio with micro caps and small cap tends to do when markets are doing good. But such aggressive approach also leads to a lot of pain, volatility when these markets are weak. And we believe a balanced approach gives you similar or better kind of a gains over a stock market bull and a bear phase with lower risk.
Got it. And are you guys available for those investors? Like, because there are instances wherein if somebody has invested like 50 lakhs or 75 lakhs with a PMS like yours, right? And जब market गिरता है, उनका जो drawdown, उनके portfolio का जो drawdown value होगा वो बहुत ज़्यादा होगा, because naturally the portfolio value is also big. So in that case, are you available for your investors? Because जब panic होता है तब more than knowledge, people want an emotional support coming from an expert.
Correct.
So is that handholding also a part of your process?
So as part of a full service broker, we conduct a lot of online and offline events, especially when you have some event or some kind of a volatile phase in the market. That helps investor basically understand why the markets are down and what is our outlook and what we are doing for them in terms of their investment into our products. So I think if we as an asset manager or as an advisor and the investor are on the same page, that helps. That is what we've been doing. Plus, as I said, a robustness of any investment product is when markets are not doing well. A lot of people tend to do very well, markets are going up.
Yeah.
But in our case, our products tend to do very well, outperform when markets are weak. So that's been the experience, and that's why I said we don't have very skewed kind of an approach towards, or we don't have very, very aggressive kind of allocation in most of our stock baskets, and also the PMS.
Understood. सर सबसे पहला सवाल, ठीक है, आप इतने साल से मार्केट में हो, आज के दिन जिस दिन हम रिकॉर्ड कर रहे हैं निफ्टी 50 ऑलमोस्ट 21,000 में पहुंचने वाला है, सबसे कॉमन सवाल ही है, markets are very overvalued. Should I invest right now?
So Nifty, you should not only look at the absolute value, you should also look at the valuation of Nifty. So Nifty might be at all-time high.
You mean Nifty 50 companies?
I'm talking about Nifty index.
Okay.
So if Nifty index आपका 21,000 पे होगा, which is at all-time high, but Nifty valuations are nowhere close to all-time high. By Nifty valuations I mean Nifty का PE ratio, which is price by earning. So Nifty का जो market cap है, अगर उसको हम जिससे divide करते हैं, तो निफ्टी की 50 जो कंपनीज के जो प्रॉफिट्स के साथ में, तो उससे निफ्टी का पीई रेशियो निकलता है. तो ये पीई रेशियो आज से 2 साल पहले अक्टूबर 2021 में 32 पे था, बेस्ड ऑन पास्ट 12 मंथ्स आपकी अर्निंग्स, राइट. आज 2 साल बाद आपका पीई रेशियो इज अराउंड 22.5, 23. सो आपका निफ्टी एक्चुअली 25 से 28% ना 2 साल में चीपर हुआ है, जबकि आपका इंडेक्स 18,500 से 21,000 हुआ है.
अर्निंग्स का ग्रोथ भी बहुत ज्यादा है.
अर्निंग्स का ग्रोथ अराउंड 30 to 34% हुआ उस पीरियड.
अंडरस्टूड.
ओके, सो जहां निफ्टी आपका 12 से 14% अप्रिशिएट हुआ है, आपका 30 से 34% ग्रोथ आई है अर्निंग्स में. तो
Interesting.
P आपका कम है 2 साल में. Number 2, even if you look at the P valuations or as a pre-COVID level, तो जनवरी 2020 में आपका निफ्टी था 12,500 की रेंज में. आज आप बैठे हैं 21,000 पे, राइट? सो निफ्टी हैज मूव्ड अप बाय क्लोज टू 80%. बट इन दैट पीरियड आपका निफ्टी के जो कंपनीज का प्रॉफिट है, अगर हम उसको एज देखें इन फॉर्म ऑफ अर्निंग पर शेयर ऑफ निफ्टी, वो 440 से 910 हो गया. तो निफ्टी के प्रॉफिट्स हैव गॉन अप बाय 110, 115%, but Nifty actually has gone up by 80-85%. So from pre-COVID level also, Nifty is actually cheaper by 10 to 15%. So let's not get bogged down by the absolute value of Nifty. Nifty is no more cheap. I do agree with that, but it's not so expensive, especially given the fact कि next 4 से 5 साल इंडिया की इकोनॉमिक अपसाइकिल है और corporate earnings will be very very healthy. So you will have a lot of opportunities, or even if you invest at this level over the next 3 to 5 years, you will be able to create or generate very very handsome returns according to us.
Okay, so do you recommend people to continue with their SIPs? And
People should continue their SIP if they are coming new to the market and want to invest in market lump sum. They could. If they're little apprehensive, they can invest 70, 75, 80% now and keep little bit of cash on the side, because markets आपको हमेशा opportunity देती है. कभी भी 5, 8, 10% का फॉल बाजार में आ सकता है, एंड दैट वुड बी एन अपॉर्चुनिटी टू ऐड मोर. बड़ा फॉल मार्केट में रोज रोज नहीं आता है, 10 साल में एक बार आता है. द प्रॉब्लम हैपेंस इन द small cap and micro cap space. There every 2, 3, 4 years you have 30-35% fall in the small cap index, and the stocks, individual stocks can go down by 40, 50, 60, 70% also. So that's where you need to be little cautious at this space if you are very very risk averse kind of an investor and are not willing to see a big drawdown in your investment.
But sir, how different should be the strategy of investing in micro caps, small caps versus investing in like large cap? Because let's say a big Nifty 50 company, drops by 10%. I would blindly buy more. बट स्मॉल कैप अगर कोई स्टॉक्स अगर 10-20% गिर रहे हैं, ठीक है, शुड आई वुड बी वेरी एप्रीहेंसिव बिफोर इन्वेस्टिंग अ वेरी बिग पार्ट, बिकॉज बहुत सारे रीजंस की वजह से एक स्मॉल कैप कंपनी इज नॉट एज मैच्योर एज अ लार्ज कैप कंपनी. So how different should be the strategy there?
So in small cap, one, when you enter a company, you have to be very very clear why you are entering. Second, in small caps and micro caps especially, you have to be very very agile. Okay. You can't wait for things to sort out on their own. As I said, the most important part of investing is taking the timely action.
Yeah.
The timely action again means if things don't go your way, you have to exit. And in small caps, it's all the more important because they don't have debt. And if some large investor, institutional or ultra HNI is exiting, the stock can go down on 40-50% also, not on fundamental reason, but on this technical reason. So that's where you need to be very smart. Secondly, there is a lot of data available, literature available, shown to small retail investors that over 10-year period or 20-year period, if Nifty is given you 13.5%, 14% kind of a CAGR return, your small cap index is given you 18 or 19 or 20. So that's what attracts people there. But if you look at the small cap index, every 10 years, 90% of the small stocks in small cap index actually change. So it's not the same stocks which are doing well. Yeah. So in small caps, as I told you, the bull market rally, every rally you have a different kind of sector which will lead.
Yeah.
The small cap is different kind of stocks that will be in the rally. And some of the stocks which we did well in the last small cap rally might not do well in the next rally, and you might not get a right exit for 4, 5, 6, 8 years also.
Got it. Okay, so these were a few generic questions and doubts that most retail investors have. Now, what we'll do is we'll pick up a few personal questions about investing which have been sent to us by our community members. And अगर आप उनकी help कर सकते हो तो बहुत अच्छा हो जाएगा, ठीक है? The first question is from Meera. What are the warning signs that a stock might be overvalued, and how should I adjust my investment strategy in such scenarios?
So, different sectors have a different way where you value a company. It could be a price P multiple or this EV by EBITDA, enterprise value by the operating profit, or in some cases like banks, you look at price to the book value. Those are the simple benchmarks parameters that you look at. And you look at the P of other stocks or companies in that space and to understand if it is in sync with that. And also what has been the P for the longer period of time. So these are the very simple basic ways of understanding if stock is in line with the historic P multiples or valuations, or it is out of line with the other players in the sector. So that's a very simple way of just looking at. But most of the mature or advanced investors also look at the cash flows. Business should be able to create cash flows, but that's not something which a small investor is able to understand and basically discount those to come up with the fair value of stocks. But one more thing, the P multiples are also function of your ROE and ROC, return on net worth and return on capital employed. If your businesses are more efficient, then they have higher P multiples.
Yeah, naturally. And if a company has consistently shown
consistency is another point factor which has an influence on the valuations.
Perfect. अगला question है Karan का. Is investing in mutual funds safer or more profitable than directly investing in stocks? How do I choose the right mutual funds?
So yes, if you don't have the time and the understanding, mutual fund is an excellent way to invest in equity markets. In fact, the newbies would get a good exposure into equity markets through this mutual funds. And mutual funds have done an amazing job in terms of SIPs, creating awareness about staggered or regular way of investing. Now, when we look at schemes mutual fund, we don't just simply look at the absolute gains returns that the scheme or the fund has given over 1 year, 2 year, 3 year. Any investment product has to be looked in light of the risk taken. So we rank the mutual fund schemes based on 60% weightage to how they have done in terms of returns, 40% weightage we give to the risk taken, which could be measured by various kind of ratios, Sharpe ratio, Sortini ratio, performance ratios. So
standard deviation.
So these standard deviation is a small part of all these ratios. Okay.
Yeah.
So that is how we every month give mutual fund picks, where in each of the categories we give you the top 4 or 5 or 6 schemes that we believe are available based on our understanding of their performance in terms of absolute returns and also in terms of the risk taken to get those returns.
Recently, Sharekhan also had this campaign, right? कि अगर market में approach casual है तो market में मत आ, right? तो जो लोगों को market में ज़्यादा अपना time वगैरह नहीं invest करना हो, तो उनका क्या अप्रोच होना चाहिए? इन्वेस्ट ही नहीं करना चाहिए या फिर म्यूचुअल फंड में डालना चाहिए?
If you are new to the market, you lack understanding, you don't have the time to do your homework, mutual fund is a way to do it. But as I said, full service brokers like us also offer ready-made investment solutions. So we offer something known as stock basket investing on our Invest Tiger basically app, which is available. There we give you a lot of stock basket based on your risk appetite. Either you can invest in a large cap basket or a mid or small cap basket or a multi-cap basket. We also have a lot of stock basket on themes. Basically, if you want to play the multi-year upcycle in India, we have a stock basket for that, where you can create wealth over the next 2 to 5 years. And similarly, we have a basket which is on the large multinational companies. So these various options are available, which will not only engage you, help you with a ready-made single solution, but also engage you and also improve your understanding about investing.
Adding on to what you just said, the next question is from Sunita. Okay, her question is basically that what are some industries that one could consider for the next 10 years? So like India के अगले 10 साल के लिए अगर किसी को invest करना है, कौन से ऐसे industries है जिनको रिसर्च करना चाहिए, जिनमें स्टडी करना चाहिए ताकि एक अच्छा खासा मल्टी बैगर रिटर्न मिले?
Correct. So, as I said, India is on a path of a multi-year upcycle. And that we strongly believe, because if you see past 6 to 8 years, basically spending on the infrastructure development by state governments and central government on one side, and on the second side, that NBSC loan drive, towards consumer loan, retail loan was basically helping the spending from consumers. So
Yes.
These were the two legs of growth in economy in India. Now, what has changed in the last 1.5, 2 years is that you have two more engines of growth, and these are multi-year engines. Number one, you are seeing an upcycle in the real estate market. Now, real estate has a very huge impact on the economy because it will help create a lot of jobs. It has a wealth effect. Plus, it creates a lot of demand for steel, cement, pipe, tubes, engineering
Everything.
goods. So it can have a very huge impact on the economy. And real estate cycles are not short-term cycles.
Yeah.
They are 5 to 8 years of an upcycle followed by 10 to 12 years of a down cycle.
Yeah.
Number two, after a long phase, almost a decade, what we are seeing is that private sector in India is starting to invest. They are starting to look at the expansions in their factories, and that private sector capex cycle is also not a short-term cycle. It's a 5 to 8 years up cycle. So you look at any industry, be it steel, cement, paint, tiles, tube, every industry today is talking about expansion. A lot of expansion has already begun rolling out. You talk any large corporate house in India, Tata, Birla, JSW, Adani, Ambani, they have anywhere between 40 to 60 billion dollars of expansion plan over the next 5 to 8 years. Now, this again is a very huge driver of growth in the economy. So with these two new drivers of growth, I think next 5 to 8 years for Indian economy, corporate sector, and for the equity investor is going to be a very big approach. Now, based on this thought, I think one should have allocation to real estate and real estate linked stock. That could be the building material companies who make tiles or pipes and stuff like that, or the mortgage companies who will give the home loans for this real estate upcycle to go on.
Yeah.
Right? Number two is going to be engineering space, capital goods space. So whenever there is expansion in the private sector, the engineering capital goods will do amazingly well. This is what we had seen in the 2002 to 2008-9 rally also. Right? Third, of course, if the economy has to grow at such a healthy pace and there has to be expansion, everything, banks, financial services have to support that.
Yes.
Banks are the lifeline of any economy, so you need to have exposure there. Lastly, if the economy is doing well, consumer spending will grow. Discretionary consumer spending stocks should also do very well. And mind you, most of the multi-baggers in India, bulk of them have actually this thing come from this space, consumer spending space. So these are the four spaces we believe should have 70 to 80% kind of an allocation in a portfolio which wants to play the 5 to 8 year cycle. Now, just to add, this engineering capital goods space that I talked about also includes railways and this is defense. So before you ask me what about railways and defense, so that is what is included in in this engineering and this academic space.
Yeah. So एक और चीज guys कि मतलब credit drives the entire economy. Okay. As people's disposable income increases, right? People will have more access to capital via banks. तो अगर वो एक गाड़ी खरीदेंगे, घर खरीदेंगे, कुछ भी खरीदे, ठीक है, renovate करे, वो banks और financial institutions के पास जाएंगे and they will give them money. ठीक है. Today, if you look at the quarterly reports of most automobile companies, you will see like Maruti Suzuki के case में their sale of their premium cars, the growth of sales of their premium cars has been higher than their hatchback growth. Yeah. Which means that people are actually now willing to pay more to buy more expensive cars, to buy that more expensive house, which was not an Indian thing. India पहले क्या था, traditional थे, saving करते थे. Now because of the access to capital, people are also spending more and spending more for that premium feeling. The next question is from Malini. Okay, what are the key indicators and metrics you look at when deciding to invest in a small cap company, particularly in a market like India where information can often be less transparent?
So before I get into what do you look at numbers and parameters, I think the biggest mistake people make while small cap investing is investing at the wrong time. So you should not try to time the market when you're investing in overall journal, but if you're investing in micro cap, small caps, it makes a big difference. So what we have seen in past 20-25 years is that you have had 6-7 times one-way kind of a small cap rally, and these rally range from 16 months on the lower side and 22 months on the upper side, so 17-18 months on an average. Post that 1.5 year of rally, you have around 1.5 year or 2 years of pain where small cap index goes down by 35% and individual stocks can be 40 to 60 or 80% also. Unfortunately, most retail investors come investing into micro cap, small cap when bulk of that small cap rally is already done.
Which is currently we are at which month of the rally?
This rally started somewhere in May, the small cap, April, May. So we are already around 5-6 months or 7 months.
Yeah.
But they come when already 8-10 months, 12 months are done. So you are investing near the peak of the small cap or a micro cap rally. So that's one thing you should be very, very mindful about. Invest in small cap in year like 2018-19, year like 2022. Okay, so when the markets, the small cap index is down by 30-35%, that's the right way of doing it. Or you invest in small cap mutual fund in form of SIP. Now coming to the parameters, now it's parameters. What we do is we have our proprietary 3R research framework. We use that. Now that starts from the top-down approach. We believe if you are in the right space sector, your chances of going right are much high. And if you're not in the right space, you pick the best of the stocks, still you lose money.
Okay, I hope this 3R approach is helpful for you. The last question is a question which a lot of people want to know. Okay, the question is from Samir. Okay. I want to understand, I have been investing in the equity markets in the last 4-5 years. I want to know from a seasoned player that is it possible to actually upgrade your lifestyle using the stock market returns? मतलब मैंने ये जानना है कि 10-15 साल बाद क्या आप आपका ड्रीम कार, ड्रीम घर ये सब स्टॉक मार्केट रिटर्न से कमा सकते हो?
So, if you have basically investable funds, if you're putting in an asset class which is giving you 6-7-8% return pre-tax and post-tax, depending on your tax, you are not even able to beat inflation. On the other hand, you have an asset class which can post-tax, because the taxation here is lower, the long-term tax is 10%, short-term 15%, can give you 17-18% kind of a CAGR return. That means in 4 odd years, you can double your money, and in 10 years, your money can become 4 or 5 times. And that has happened over a period of time.
Yeah.
If you are able to do that, generate it with a disciplined manner, in a right kind of serious understanding, research, and not having a casual kind of attitude, yes, you can create decent amount of wealth for yourself and your family to basically afford the kind of luxuries or this thing, meet your financial objectives. It could be your child's education, or child's marriage, or you buying a good nice car or a house, I think that is something possible from the only from the equity market, according to me.
That's all for today's video, guys. Thank you so much, Gaurav sir, for
Thank you.
giving your time. I am sure कि लोगों को आज कुछ नया सीखने को मिला investments के बारे में, equity के बारे में. Make sure to follow Gaurav sir on Twitter and also Sharekhan across their social media platforms. और अगर आपको इस वीडियो में कुछ भी अच्छा लगा, hit the like button, and if you're new to the channel, consider subscribing. Your love and support keeps us motivated. Goodbye and see you guys next time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.